Hey, what's up, everyone? Evan Carthy from evancarthy.com. It's September 21st, 2022. Let's go over the markets. So today was just going up and up and up a little bit, nice little up, and then the FOMC had their statements, their meeting, market came crashing down, rallied back up real fast, now it's crashing back down. So real quick, let's see what they said. Using Forex Factory over here, it kind of keeps the highlights from all the world's economic news. And over here on the right is where they have all the stories. Normally it's littered with like yellow, orange, and little red stories here and there. It's all red now because the Fed's pal had a lot to say today, and the market has not been too kind to what he said, which is no surprise. Over here in the U.S., if you live in a house, even an apartment, especially if you own it, if you go grocery shopping, if you have to pay bills, inflation is out of control. It's been out of control. And basically, he just said today what everyone else has been feeling, and the market is selling off. I mean, let's look at what he said here. In housing market, we have to go through a correction to get back to normal price growth. Well, if you own a house and have been able to sell a house in the past year and a half, you made a killing off of it. Prices have just skyrocketed. The problem with it is you'll have to pay that much markup if you want to move somewhere else. So unless you have some amazing situation where you're able to sell a house and then, I don't know, maybe someone granted you land or something like that, or another house, you made a killing. But the house prices are still absolutely insane right now. And in order, he said, to get back through to where it should be normally, we have to go through a correction. So I guess we have to see another housing market crash for us to get through it. Then, what you see about here, in spite of modest supply side healing, inflation has not decreased. Yeah, no crap, dude. If you've gone to the grocery store, prices on things are just completely out of control. They are super, super high right now, and they haven't come back down. And let's see about this. Chances of a soft landing also likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. So basically, they're going to keep on raising the interest rates, which, yep, that's what you got to do to fight inflation. It's been too little too late. So here we are now with it. About this one, to start cutting rates, we'd have to, well, that's not going to happen anytime soon. Y'all just raised them today. We'd have to be very confident inflation moving back down 2%. Well, it's not moving back down 2% anytime soon. I'll show y'all here in just a little bit. Labor market continues to be out of balance. We expect supply and demand conditions labor market to come into better balance. Well, I hope so, because it keeps on going the way it's been going. Things are just going to get from bad to even just extremely worse. So really, I'm not sure how it gets much worse than where it is, so that's really saying nothing right there. And, oh, he's strongly committed to bringing inflation down. Yeah, it's called doing your job, dude. Do your job. Do what we've all been seeing for the past year and a half. You know, it didn't help whether Republican or Democrat when President Trump was in office, when they just kept on throwing money at COVID, spending money, and then Biden hasn't helped at all. He's just been throwing gasoline on the fire for it. So here we are now with it. So it doesn't matter, Republican or Democrat, both to blame for it. Trump was spending money during COVID. Biden has just been throwing gas on the fire. That new infrastructure bill, which is pretty much everything but infrastructure, it's absolutely insane. But look at the inflation index right here. Look at for the major countries. I'm going to look at the UK is hitting 10%. It's going to be really interesting to see. I'm getting my soapbox here. It's going to be really interesting to see over there in the UK and Germany, Germany especially, what happens this winter when the cold hits over there, because they're having an energy crisis over there, especially with Russia restricting the natural gas supplies over there. So it's going to be real interesting to see what happens to those people when they laughed at President Trump, and President Trump told Germany especially, hey, y'all need to become energy independent as much as possible and not rely on Russia, because eventually they're going to stab you in the back. And Germany laughed in his face, and look where they are now. People are literally cutting down all the forest over there to have firewood for the winter because they know it's coming. But look at this. UK is at 10%. US is over 8, was about at 9%. Germany's pumping up to 8. France is at 6. I mean, it's absolutely insane. And look at the inflation rates going back all the way down to 2000. I mean, we pretty much held all the way. Here was the around the 2001. That was the tech bubble bursting. Here's the housing financial crisis, and even for a while, they had the housing financial crisis. Even for a while, it went into negative inflation, which isn't good. But it came out of that, and then just been real low ever since. Which it's not hard to be low when you have low interest rates. But then, lo and behold, look what happened. right about here, April of 2021. You know, it normally had rarely been over 3% for the most part. A couple times in the 4%, but was able to get all knocked back down. But here it went up to 4%. 5%, and what's going on? 5.4, okay, 5.4, 5.3, 5.4, okay, maybe we have it stabilized. Maybe, you know, last September, a year ago here, we're thinking, okay, we got it under control, because look at over in 2008, you know, went up to 5, 5.6, 5.4, looks like stabilized. Okay, now we're going back down, we're doing all right. But nope, what happened? Jumped up to the 6s, and then it's pretty much been going up ever since. 7, 7.5, 7.9, 8.5, 8.3, 8.6, 9.8, 8.5, and 8.3. So we're still well over 8. We're still way far away from that 2% range. So it's just absolutely insane. Here's just the adjusted consumer price index, you know, going all the way back to 1913 at 9.8. Look where we are today, 296. You know, for the adjusted consumer price inflation for it. So yeah, you know, what he said today was nothing new. It's with anyone who's been grocery shopping, having to pay bills, you own a house, rent a house, lease a house, an apartment, whatever. You felt the strain of your dollar, especially over here in the U.S., or really worldwide. It doesn't really matter where you live, pretty much. That the money that you have is buying you less today. So, anyways, that's on my soapbox for a little bit. It's just amazing that these people say things that's completely obvious and it's supposed to be brand new news. But anyways, going over in the market over here, had lots of setups today, man. When you get moves like this is really good. So, you know, starting off right here, here was a long setup over here that initiated way back over here yesterday at 11 a.m. and no, excuse me, there it is. So it initiated over here at about 2:35-ish before the market closed yesterday, and just kind of routed around. Eventually came up there and hit its target about 7:30 in the morning up here. So that was a easy trade. You know, about nine point trade or so, 9-point gain right there. So that one's said and done. Then you have another one getting set up over here, and I'm just using the red 7-4, so I'm not going to go over every single trade, especially for the white ones, because the red ones have the bigger moves. Then here's a short trade right here, but this is right when the FOMC started speaking. There's no way to get into that, absolutely impossible. I mean, price didn't even close till after the target was hit over there, so that was the easy short trade. But what it has done is it has set up a long trade right now that is a very nice area to get into, because using that red, and that red, we had a breakout to the upside here, but price did not go up and hit the green line up here, so it was not fulfilled. We'll just draw that, because that would have been somewhere along the green line, would have been where the exit was. But since price came back down, broke this low right here, the exit gets moved to where the original breakout was, so right about there, about 38.80, and price has been moving down ever since. So this provides a really nice long, really good risk reward currently where it is at. Now price, of course, can still go down, but this is a trade I'm looking at getting long in, maybe when the market's open back up at 5 or so, shoot, maybe after this video. But you know, moving from where it is now, I mean, you're looking at, it's a good 85-point move right there. Plus, on top of that, you still have this move up here, which is still yet to be filled. So the long trades are starting to have them filled, or starting to fill up over here. So it's looking good for eventually, you know, a good push up here, moving the market. Looking at the overbought, oversold indicators. So for our 4-hour chart, actually, you know, move back down, is getting close to being in the overbought territory up here. But now with this big move down, it's moved down even more, and probably in the overnight it'll move down even more since we've had this big push. So we're still looking for the overbought area to go up there and get hit. And then what did for the daily chart over here, price was getting close to hitting the oversold territory, never did, went up. Now it looks like another day or two, if the downward trend does happen, it is going to go down in that territory right there, and that would signal a good signal for really we can start looking for the long move up for it. So that is the S&P 500. Then for the Russell 2000, this is a trade I was in that did get filled today. It started off yesterday over here. Price came back down, waited around, never broke this high up here. So the exit did not move back down to the breakout, which would have been right here. It stayed along the green line. And then right when the Fed Chairman Powell started speaking, bam, look at that, right down to the bottom, took it out. and then start reversing and go the other way. But it doesn't matter. It hit that setup for it right there. And then since then, for the other ones that have been created for it, let's see if there's any that. Nope, that was a long one that got hit right there, so that one's dead and done. And this time, when this one is so close together, this one's already been hit, yeah, because it has such a steep angle for it right there. So nothing really going on, at least in the 5-minute chart. Let's see real quick if there's anything going on in the 15-minute to the hour chart. So there's that. Well, that was up one from yesterday. 1 hour chart. Okay, not really going to worry about it. Let's see if there's, okay, the overbought oversold indicator, it's moving back down. So the next area we think it's going to hit is going to be the overbought, since it's coming from the oversold territory right there. And then going into the daily is starting to get down lower and starting to get even closer to creeping into that, much like the S&P 500. Going on into oil over here. Oil does have a couple good setups over here. So using the 15-minute chart, actually, I think moving back and using the hourly chart right here. Yeah, using the hourly chart right there. They're created a short entry right here. Price had been just waffling around. But what we're looking for the current exit for this thing to go would be this green line right down here. So somewhere along there is where we're looking for it to get filled, you know, in the $79 range for crude oil. So we think that's going to be the next target that's going to get hit, and that's the hourly chart right there. Then if we go to, here's the 15-minute chart, using this red cement for this one and this one. Let me hide this. Let's make it easier to see. Using those on 15-minute chart. Here's the breakout right here, and then we're looking for a price to come down here about $81. So we definitely have two trade setups currently for crude oil, and we are definitely looking for it to continue moving down, hitting this one somewhere, you know, along the $81, and then for the hourly chart coming down here and hitting down for the $79. So we're looking for more weakness in crude oil for the near-term future. Going on into the Dow Jones right here, we still have, going to the hourly chart, we still, excuse me, let me go back to crude oil here real quick. Sorry about that. Looking overbought, oversold. 4-hour chart is still in the middle of nowhere. And daily, same thing, still middle of nowhere. So that's not showing us anything. Now Dow Jones, looking at the hourly chart from this setup, which initially initiated right there, but it came back down, broke the low right down there. We're still looking at it going up, get hit around 32,500 for it. Look for support level down along this green line down here. I'm not saying it's for sure going to go down there, but that would be the next definite support level we'd be looking at, that which would be around, was that 29, in the 29,000s for it. And that's using the 1-hour chart. Going down here, I believe it's the 5-hour chart for this next kind of couple setups. So we have that one, and that one for a long. This one came out, got completed, finished it up right there. And then for all the craziness that we had for this one, these are just a bunch of other ones that got completed. Here's a short one that got filled right there. This one is going to be a long one, but this one got, unlike the S&P 500, this one did get completed. As you can see, price broke out right here, came up and hit the line, so that one did get completed. And I'm going to draw the next one because that one's already going to be a steep angle, and that one got completed. So the one longer term trade that we do have right now is still this long over here, right there. Using the 4-hour chart, price has probably come back down out of between the S&P 500 and the Russell 2000s, come down the most for it. And then for the daily chart, is getting very close. Now it's even lower than the last time. So we'll see in the next day or so if that can finally go down in completely in the oversold territory, and then we'll be definitely looking for a reversal coming back up for it. So those are the charts for today and my little rant I had about the FOMC speaking. So take care. Talk to you soon. Bye.